Hey guys, this is Financial Fitness. Me and Jose and Josue are out on a job right now. We're hooking up these Haynesville gas shale wells, and it's a great day, beautiful day actually. But I wanted to jump on here. This isn't a welding video, not yet. It might turn into one later. But I want to jump on here and tell you about Mr. John Paulson. If you're not familiar with him, he was a big part of The Big Short. Now, if you've never seen the movie The Big Short, it's pretty wild what happened. I'm sure everybody's familiar with it, probably. Some of you may not be. So some really smart people that were paying attention saw what was coming. See, this happens through history. We can go back 100 years ago this year to the Weimar hyperinflation, and people saw what was coming then. There's a story about a man, I can't pronounce his name, it's a German name, but he was called the richest man in Germany. He saw what was coming, and he bought shipyards and all kind of industrial complexes. He got in massive amounts of debt, and he let the government inflate the currency away, and he paid it off with money that they were burning for firewood. There was a lot of millionaires made in the Great Depression. The people saw what was coming. Not very many people, because 90% over history, an average of 90% of people that use the currency day to day never see hyperinflation. And the government tries to keep you from hearing this stuff because they don't want you to know. They don't want anybody to know the actual price of gold and silver. They're going to hold it down as long as they can. But one day, when inflation happens to everybody, when people start noticing it, the price of gold and silver have no choice but to go to the moon. And if they reprice gold, it should be around $10,000 to $15,000 an ounce. That is so hard for me to grasp, but that's just the truth of it. Now, the rich don't normally tell you what to do, but in this case, Mr. John Paul is kind of telling us what to do. And even the people that don't tell us what to do, they leave clues behind. So it's just like anything else. When I wanted to get in shape, I started listening to the people that were in shape, that stayed in shape. And that's what I'm doing now. And that's what I hope y'all are doing, and I'm going to try to help you. I'm going to run this clip with Mr. John Paulson. Check it out.
After you made your famous trade that we talked about, I think you put on a trade where you bought a lot of gold or gold futures, and you were what was called by some a gold bug. You're a big believer in gold. Gold's now about $1,700 an ounce or so. Are you believing that gold is now a good investment at this price?
Yeah, we do, and thank you for bringing that up. We do believe that gold does very well in times of inflation. We saw what happened the last time gold went sort of parabolic was in the 70s when we had 2 years of double-digit inflation. And the reason why gold goes parabolic is that basically it's a very limited amount of investable gold. I think it's on the order of several trillion, while the total amount of financial assets is closer to 200 trillion, and fixed income somewhere above 120 trillion. So what happens is if you own long-term treasury bonds that are yielding 2%, and interest rates move up to 5%, those bonds fall materially in value. Likewise, if you have cash sitting in a bank that you're earning 0% on, inflation's 4%, you're gradually eroding the value of your money. So as inflation picks up, people try and get out of fixed income, they try and get out of cash, and the logical place to go is gold, especially if it starts to rise in inflationary times. But because the amount of money trying to move out of cash and fixed income dwarfs the amount of investable gold, that the supply and demand imbalance causes gold to rise. And the more it rises, it sort of feeds on itself and has the potential to go what I call parabolic.
So today you are a big believer in gold as a good investment now?
Yeah, so we thought in 2009 that with the Fed doing quantitative easing, which is essentially printing money, that would lead to inflation. But what happened was that while the Fed printed money, they at the same time raised the capital and reserve requirements in banks So the money sort of recycled, went, the Fed bought treasuries, created money, wound up in the banks, and then was redeposited at the Fed. So the amount of excess reserves at the Fed almost rose by the same amount they were printed, and the money never really entered the money supply, so it was not inflationary. This time around, the money has entered the money supply. So the money supply was up something like 25% last year. And the best indicator of inflation is money supply. So I do think we have inflation coming well in excess of what the current expectations are.
All right, I'm going to put a cap on this weld, and I'm going to talk to you while I do it, because I want you to know about leveraging your time. I've listened to Rich Dad, Poor Dad while I did this. I've listened to The Richest Man in Babylon. That's another good book that I really think people should listen to, because the way you make money hasn't changed. And why it's so important that I'm trying to bring to y'all what's going on with the wealthy people is because it's hard to make $20 billion, especially in one trade, one happening. And it's even harder to hang on to it. So the wealthy people are running to gold, silver, and cryptos. Now, I thought it was really interesting that John Paulson did not own any crypto. He was not a fan. And there's several wealthy people that do own cryptos. It's, but it's up for you to decide. But the one thing I don't want anybody to do, none of my friends, family, subscribers, listeners, I mean, nobody, is to do nothing. Because it is so easy to do nothing. But check out this whale. What? So, what I want to do is encourage y'all. Keep you posted. I hope y'all have an awesome day. I will see you tomorrow.